This is Rick Rule for Rule Investment Media, sponsors of the 2024 Natural Resources Investment Symposium, held July 7th through 11th in Boca Raton, Florida, or via live stream in the comfort and convenience of your own home. It's important to note that in this conference, we will present you between 50 and 60 hours of very high quality but very dense information, more than you will possibly be able to absorb. To that end, whether you attend live or via live stream, you will have access to the conference recordings, which you should use periodically to refresh your memory. Further to that, we are interviewing every public company sponsor and every speaker before the conference so that you can allocate your time and your resources better, both before and during the conference. Note too that you get out of this what you put into it. The harder you work, the more money you will make, the more that you will learn. Note further that every public company at this conference, every exhibitor has been vetted. Every single public company in the conference is owned in my account or in accounts managed by me. That doesn't mean that every stock that I buy goes up, sadly, but what it does mean is that every exhibitor has been vetted. At most conferences, the qualification to be an exhibitor is simply a check that cashes. And to that end, ladies and gentlemen, I am delighted to welcome a new friend to the conference, Mr. Ramon Barua of Aclara Resources. Thank you, sir, for your efforts on behalf of natural resource investors. Thank you, too, for your support of the Natural Resources Investment Symposium.
Thank you. On the contrary, thank you very much, Rick, for inviting us to see this conference.
Give us an overview of Aclara. What is it that you're trying to accomplish? What do you hope to produce? And where are the company's assets located?
Sure. Look, first of all, I mean, people qualify as a rare earth company. And I would like to make a precision. Rare earth really encompasses 15 different elements. Some of them, Rick, sell for $1 a kilo, and there are others that sell for $2,000 a kilo. So there's a lot of difference within rare earths, and we focus on the important ones and clearly the most expensive ones, which are the heavy, more specifically dysprosium and terbium. Very recently, the Department of Energy in the US published a report, and dysprosium came up on top as the most critical of all elements, much more critical than lithium, cobalt, uranium, and others. And this is because these elements are crucial for us to be successful in the electric revolution, no, the electric transition. Why? Because these elements go in magnets, in fact, used in the motors of electric vehicles. So that's the first important comment about Aclara, is that we're focusing on the most expensive rare earths. Second, we are in a mining conference, so we'll care about grade. And first, it's difficult to assess grade because people talk about total rare earths, rare earth oxides, etc. It's very difficult. But when you focus on dysprosium and terbium, we have the deposits in the world that have the highest content of dysprosium and terbium. No, this is very important. And to give you an idea of materiality, when we have two assets, one in Chile and one in Brazil, those two assets are in action. We're at the project stage right now. Those two assets production will represent 7% of China official production in 2023. No, so quite material production in the contents of the world. And finally, very importantly, I would say, is our deposit type. You know, we're talking about an ionic clay. Think of it for people who are familiar with other types of mining. Think of it of a disseminated gold deposit that has a grade between 1 and 2 grams, you know, that has a very simple metallurgy. And we have used that simplicity to our advantage. We have come up with a process that I believe, Rick, no other mining company in the world can claim. No? Why is that? Because we're going to be extracting the rare earths from a very superficial deposit, ratio of virtually zero, without using explosives. There's no crushing and no milling. The plant is very simple. It's basically the clay, water, and ammonium sulfate, which is a very common fertilizer commonly used in agriculture. And we're going to be recycling water within the system with 95% efficiency and taking that additional step of water from recycled sources. So we're a company not even comparable to people who do desalination, taking water from the ocean. We take zero water from natural sources. And then the fertilizer we're able to recirculate also with 99% efficiency. And all of this recirculation allows us not to have a tailings dam. No? So when have you heard about a mining company without a tailings dam? It's given that we didn't crush them or mill them to take them back to the site from where we took it, and we're going to be revegetating that with native species. So we're going to be producing a rare earth carbonate that, as I mentioned earlier, very intense of dysprosium and terbium at competitive cost.
Ramon, rare earths investors have noted, as have governments, that most of the rare earth value creation chain from initial production through processing takes place in China, which has caused geopolitical concerns in various places. Can you talk something about the geopolitics and the strategy of Chilean and Brazilian sourced rare earths and how that might be attractive to end users, but also to investors?
Definitely. Yes, that's a great point that you bring up. China controls not only the feed of course, it controls processing. At Aclara, we started by producing a carbonate, by planning to produce a carbonate, which is sort of a concentrate. But we have already announced our intention we have opened a subsidiary that will do separation and metals and alloys in the US. This is very important because here we're not talking about a commodity rig. We're talking about a very specialized product that is going to end up in our electric vehicles. No? And these companies like General Motors, Ford, Tesla, etc., they are not in the business of mining, and they want companies to get them as close as possible to a final product. Right now, they're in a lot of trouble because, I mean, older policy says that they should have at least 3 different suppliers for everything. And we're talking here about the permanent magnets that go into their motor. So this is the heart and soul of the electric motor. And right now they're purchasing magnets for only one, which you put very clearly, it's China. So it makes a lot of sense first to have an alternative supplier, especially coming from countries that have trade agreements with the US or with Europe that has enhanced them. And second, it's very important for a product that is going to be a solution in the fight against climate change, that is sourced environmentally and socially under the most, ideal ways, no? And the process that I just described to you allows us to have traceable and environmentally very clean product that I think a big difference in the supply chains of these important OEMs.
In terms of understanding the potential project economics, both in Chile and in Brazil, what stage of documentation are you in? What documents can our investors relate to? And tell me, if you can, the indicated net present value of the deposits relative to your market cap. I think that's an interesting story.
Definitely. I think it's a great question. Look, I'll start with Carina, our deposit in Brazil, which is the largest. We have produced a PEA, a preliminary economic assessment. You can find it easily on CEDAR, or you can contact us. We'll be happy to send it to you. This is a PEA that resulted in an NPV of $1.2 billion compared to our market cap, which is around 50 to 60 million now. And we have $40 million in cash, and there's 20 more coming from a recent investor, a Chilean iron ore that has invested $30 million in Aclara. So right now we're trading at a negative enterprise value of around $9 million. Carina, again, has an NPV of $1.2 billion. The big risk, associated with this NPV rig is not the resource. The resource is there. Is not the technology. We have built a pilot plant and we have been able to demonstrate that. I think the hardest part was the prices at this future. We believe that there is an enormous imbalance coming our way between demand and supply. Supply, you pointed out, is concentrated in China, and demand is going to grow in, we believe, more than double. No, the volumes of DYTV that are currently produced are going to be required in the next 8 to 10 years. And that is going to put a lot of pressure in prices. The prices that we use in our document are in the produced companies, Argus Media and Adamas, but there are higher current prices for rare earth. The second project that we have is called the Penco module. There, the NPV is much lower. We used that to do our IPO in December 2021. The NPV was $125 million, if I remember correctly. So between the two companies, we have an NPV of around $1.35 billion. Important to mention, Rick, is that we just completed drilling campaign in Carina, in our biggest asset, and we're about to publish increased resources. And with that, we're going to be updating that PEA. So please expect that should lead to an increase, a further increase in the NPV that I just mentioned.
So, to summarize some of that for investors, you actually have a negative enterprise value, which is to say the value of your cash and investments exceeds your market capitalization. And for effectively no money, negative enterprise value, I understand you'll be using the cash, but on a current basis, a negative enterprise value against an indicated uh, net present value well in excess of $1 billion, that would suggest a problem somewhere. Is the problem investor perception, or is the deposit, as an example, where does the deposit sit on the global cost curve? Will you be competitive with the Chinese? And what is the certainty with regards to the metallurgy? What are the holes?
Certainly. Look, let me ask first your first 2 points directly. No, the metallurgy, I think, is impeccable. I don't think that there are many holes there. On the contrary, I mentioned we've put together a pilot plant that has processed Chilean and Brazilian clays very successfully. I think the point of being competitive with China is a difficult one. China is using very low prices. But as I mentioned, here the bigger argument is that Western OEMs are going to need to find alternative sources, diversify from China. China happens to be their biggest competitors in EVs, which is the ultimate product. And eventually, China could use the supply of rare earths and of permanent magnets, as a commercial weapon. So it's important to have that diversification. I think that the low valuation that we have comes from two primary sources. No, there could be more, but the first one is we're in the permitting process, both in our projects, and until we get the permits going with some traction, I think it's going to be hard to argue for a significant valuation. Needless to say, I don't think that we deserve also such low values at this point. And the second important reason, which is, it's really a benefit, but it's a problem for trading, is that right now we have both Eduardo Hochschild, our chairman, and Hochschild Mining as very strong anchor investors behind us. No, between the two of them, they hold 57% of the company, and liquidity is rather scarce in the market. Of course, we need to raise money, and we're inviting investors to buy today, because the priority in our future capital raises are going to be given to those who are already in the registry.
And I want to talk a little bit more about China, and you can correct me if you think I'm wrong. My belief is that some of the low-cost production in China has to do with historic mining practices that are, from an environmental point of view, pretty destructive. I have begun to see in my own career pushback in China, now that China is a wealthier economy, with regards to those practices. And my suspicion is that even separate and apart from geopolitics, the reduced tolerance for environmental degradation in China will automatically push up the Chinese cost of production. Would you suggest that that's correct?
I think that is absolutely correct. No, look, we have very little information coming out of China, but we know a few things. First, we know it has been mining these deposits since the 1960s, these ionic clay deposits. So we as miners know that 50-year-old plus mines tend to start getting tired, and we know has been sourcing part of their material in Myanmar as well lately. It's no secret that they use in situ leaching methods. No, by the way, we as Westerners are forbidden to visit the Chinese mines, so we can know for sure. But we know a few things. No, we know that with demand growing aggressively, in situ leaching is not the best method, to increase capacity quickly. And second, environmental concerns that you mentioned. We do know that China is worried about the environmental impact that they're having, which is a positive thing because we do want them to continue to produce these rare earths, but certainly much higher standards, which should push, as you mentioned, prices higher going forward.
Ramon, to the extent that our attendees, both in person and live stream, want to learn more about the company, who at the company should they address their inquiries to, and how do they reach that person?
Certainly. Look, they can certainly reach to me directly. My email is ramon.barua@aclara-re.com. Our head of investor relations is also our CFO. He's Francois Mott. And if you happen to write directly to our investor email that is easily found on our website, don't worry, it's not going to fall in an empty box. We read every single email that we receive, both Francois and myself. So please write us. We'll be happy to answer your questions.
Ramon, thank you for your efforts on behalf of mining investors going back a very long time, myself included, of course. And thank you, too, for your support of the Natural Resources Investment Symposium.
It's a pleasure. Thank you very much, Rick.